American banking giant Goldman Sachs hosted a conference call with its major clients yesterday. And those details of that call have since been leaked via carrier pigeon. And this carrier pigeon revealed how the analysts at the what they call the investment strategy group, the ISG, how they're basically the analysts at Goldman Sachs think very poorly of Bitcoin as an asset class, right? And over the course of yesterday's conference, investors were presented with reasons why the investment bank does not recommend Bitcoin or cryptocurrency in general as an addition to their clients' investment portfolios. This is actual copy right here. So by looking at the slides that were utilized by Goldman during this presentation, we can see that this was the summary of the argument against investing in Bitcoin. One, cryptocurrencies such as Bitcoin are not an asset class for what they say the following 5 reasons. One, they do not generate cash flow like bonds. They do not generate any earnings through exposure to global economic growth. They do not provide consistent diversification benefits because they are unstable in their correlations. They do not dampen volatility because the asset class as a whole maintains a historical volatility level of 76%. So again, they're basically arguing that this doesn't even make sense as a hedge to reduce the volatility of your portfolio. And so far, the asset class has not shown evidence of hedging against inflation, which of course is what one would argue is one of the maybe institutional arguments about investing in Bitcoin. And that although individual cryptocurrencies may have limited supplies, obviously Bitcoin's 21 million BTC cap, their contention is that cryptocurrencies are not really scarce themselves because thousands of different crypto assets have been created since 2008. And then, of course, cryptocurrencies have been used for illicit activities. It is possible to lose cryptocurrency by losing your private keys, or if a centralized exchange that you're utilizing, I'm looking at you, HitBTC, gets hacked, and their contention that the US dollar will not be debased, so that the core fundamental argument of those who are saying that Bitcoin is going to replace or that the dollar is going to be debased, therefore Bitcoin is a good hedge, is silly, right? It was for these reasons, therefore, that led Goldman to come to their kind of penultimate conclusions, right? That they do not recommend Bitcoin on a strategic or tactical basis for clients, even though its volatility might lend itself to momentum-oriented traders. Let me break that down. They're basically saying this is not a good investment. This doesn't have the historicity or the good investment profile of stocks. This is not something that we'd recommend for 10, 20, 30, 40, 50 years as a part of your portfolio, something that you would buy and hold and feel secure in. However, if you're a trader, man, this thing can make you money. Momentum-oriented trader. In fact, here's the thing. If you guys will recall, back in 2017, Goldman got pretty gosh darn bullish about Bitcoin, even hired themselves a cryptocurrency full-time trader for their trading desk. And then, of course, they ended up buying the top 2017, lost their ass on the way down in 2018. Maybe that's why they have such a negative opinion. Naturally, many of the most vocal commentators on crypto Twitter were not impressed when learning about Goldman's presentation to investors or the arguments that they utilized, and they quickly fired back. And we're going to look at some of the best comments that I found this morning calling out Goldman Sachs. So the first thing we have here is Cameron Winklevoss. He says, hey, Goldman Sachs 2014 just called and asked for their talking points back. Bitcoin was declared a commodity by the CFTC in 2015 in the coin flip order. So yeah, it's an asset whose price is set by supply and demand, just like gold, just like oil. It's a commodity, bro. Don't sue me. Let's see. That was Cameron looking at his brother Tyler. He says, crypto used to be where you ended up when you couldn't make it on Wall Street. The quality of Goldman Sachs' recent research on Bitcoin demonstrates that there has been a talent flippening. Today, Wall Street is where you end up when you can't make it in crypto. As another one from Tyler, Goldman Sachs. In 2019, 2.8 billion in Bitcoin was sent to currency exchanges from criminal entities. Fun fact, Goldman Sachs facilitated 6 billion in money laundering via one MDB scandal between 2012 and 2013. Double standard much. Sick burn. Ivan on tech saying hotels hate Airbnb, taxi drivers hate Uber, Nokia hates Apple, banks hate Bitcoin, losers hate winners. Barry Silbert saying Bitcoin market cap greater than Goldman Sachs market cap. Adam Back says Goldman Sachs aren't the smart money for a few more years. They don't get Bitcoin digital scarcity, censor resistant asset class. With GBDC buying out 2/3 of the block reward, too early for followers. Good time for Bitcoiners to stack sats, accumulate BTC positions. And Dan, I can never remember if his name is Tapiro or Tapiero, but Goldman Sachs does not make fees when a client buys Bitcoin. Buying BTC is an implicit rejection of buying assets that Goldman Sachs sells, upon which they make fees. Buying Bitcoin is a rejection of the worldview they sell, upon which they make fees. Long PTJ, short Goldman Sachs every single time. While outfits like Goldman Sachs are remaining sour on Bitcoin and cryptocurrency, other institutional players have, of course, recognized the trend and are hopping aboard. JP Morgan, who, to be honest, are former Bitcoin critics themselves, appear to be softening up to the crypto industry. This recent announcement that they will be banking partners for exchanges Coinbase and Gemini, suggesting that at least JP Morgan's traditional banking operations are certainly open to the idea of forging long-term relationships within the cryptocurrency industry in order to better support a new asset class that, according to some, isn't an asset class. Again, according to Goldman Sachs. Another institutional sized player that's bullish on Bitcoin, of course, is Grayscale, right? They've been making news all week as it is apparently on a major buying spree of crypto, supposedly buying up all of the Bitcoin mined and then some since the halving event that just took place at the beginning of May. So Goldman's attack on crypto might have been one launched out of bitterness, and it may in fact bring with it a silver lining for the Bitcoin community in other ways that we might not perceive. For one thing, the leading cryptocurrency just received exposure to some of the wealthiest individuals in the world. Of course, this making massive headlines. These high net worth clients rely on insight from the likes of Goldman Sachs and their paid analysts. But ultimately, they are responsible for making their own decisions on where to put their money. And this may end up being one bit of financial advice that they happen to ignore. And it seems that they have ignored. Many of these prominent individuals may not have considered Bitcoin's value proposition as a monetary hedge until their conference call this week. And they may have spurred the interest that we'll see them doing some of their own extended research, possibly leading to a better understanding, hopefully leading to a better understanding of cryptocurrencies and Bitcoin in general, or maybe even a call to another fund manager who knows what the hell they're talking about, right? So new arrivals to our space. These are new arrivals to our space, flush with cash, looking to diversify, may now be learning of Bitcoin's hard-capped supply, the monetary hardening, and even have coming to find out about the recent halving that just cut its inflation rate in half again. So considering the popular phrase, there's no such thing as bad publicity, this, I think, is a case where it applies as true to Bitcoin as well. So while Bitcoin's initial use case was mostly limited, we could argue, to buying narcotics on the dark web, the underlying technology has held so much promise since it's matured over the years. And now it is, it's becoming a respected financial asset, right? It's not, it is not living up. It is not anymore like what people used to think it was back in the day, right? And it's a testament to how far Bitcoin has come, right? It's the focal point in a conversation with prominent investors and Goldman Sachs bankers, where just 10 years ago, the world didn't even know what Bitcoin was, right? Okay, so this is like a huge slide. Think about that. This is a huge slide that GS prepared. Right, so even though Goldman Sachs is seeking to discourage investors from buying into Bitcoin with all of the recent kind of hedge against inflation talk, in the end, they seem to have only further cemented the asset class as something to pay extremely close attention to. And again, losers hate winners. Let me know your guys' thoughts in the comment section down below. Let's get back to the